afternoon. My name is Melissa Armo, and I am here today to talk to you about the Golden Gap. If you would like more information about the Golden Gap, please contact me at melissa@thestockswoosh.com, area code 602-799-5754. The Golden Gap. The Golden Gap is my gap strategy. I teach how to trade professional bearish gaps. I'm teaching a class on August 25th and 26th how to trade and find this Golden Gap, how to enter it, how to exit it, and how to find these gaps every day in the market. Contact me if you'd like to learn more about how to trade a gap, and if you're interested in taking my class, I would love to have you. You can reach me at melissa@thestockswoosh.com. I call this gap the Golden Gap because it's like finding gold. Once you learn how to find these gaps, they work, and you can make money doing this trading. It's like finding gold. What is the Golden Gap? The Golden Gap is a 26-point rating system I use to find the stocks that gap down every day. You can use the system to help you make money trading. You need a way to find this top gap pick every day because so many stocks gap. You need a proven system to find the top pick stock that will get the best move to make money on that day. And I have that system. I created the system. I created the 26 points over a period of 3 years of trading gaps. And the system works. The great thing about my gap strategy is that you can use the Golden Gap system to trade intraday day trading or to swing or core trade longer term, okay? So it's very powerful. Once you know how to do it, you can use it for lots of different things to make money. And if you know how to find these gaps and play these gaps, you can make a lot of money swing trading because these gaps have powerful long-range moves, very powerful. These moves can last for 3 to 5 days or 3 to 5 months or 3 to 5 years. The entry. I teach my rating system and how to find the best gap, and I also teach how to enter that gap. And the best entries happen in the morning on the gaps. You can enter and get the best price on a gap during the first half hour of the day on the first day stock gaps for your swing trade. Learning how to play gaps for swing trades can give you an edge in your trading and make you a lot of money. The first day of gaps is when you're going to get the best price, even if you're doing swing or core trading, okay? The strategy I teach is a professional bearish gap, and I have a 26-point rating system I use to find the right gap to play each morning. And I also have multiple plays I do within that strategy. And I'm doing a class teaching this strategy and the rating system on the 25th and 26th. And then I'm going to teach the plays I do within that strategy in that same class. Okay? If you already have a strategy that is working for you trading, great. Okay? Kudos to you. If not, then you need one to make money. Okay? And I have one that I'm willing to teach you. This is an opportunity. The best way to maximize your success in trading is to focus on one strategy and get good at it. This is it. This is the answer right here, okay? You do one strategy and you really nail it. I mean, you really nail it. And that is really all you need, okay? Because you can parlay a day trading strategy into a swing and core trading strategy, and you get so good at it, you don't need anything else, okay? Just get rid of all the confusion and focus. And that's how you make money trading, okay? Don't get all caught up in needing a million things to make money. You do not need 100 strategies and plays to make money in the market, okay? In fact, that's how you lose money. When you get caught up thinking you need to do 100 different things, you make money in some, you lose money in some, and in the end, you either make a little, lose a lot, or break even. If you want to consistently make money trading, and if you want to make a lot of money trading, have to get good at one thing. You have to get good at one thing, and you have to stick to it. And you make your money, and you book your money, and you stop. You don't keep trading in different things all day long, all month long, all year long. That's how you get all caught up in a swirly energy that instead of manufacturing money for you easily, it takes money from you, okay? So our goal is to be successful and be good at one thing and to create a positive energy, doing this one thing very well so that we can create wealth for ourselves and our families and the people that we love, okay? So you need one strategy and one play which works. That's all you need. And if you can combine one strategy, one play, and one concept and do them extremely well, you can make money trading. The gap strategy and point rating system I teach in my 2-day class works. It will help you find the right gap to play each morning to make money. It will help you find the right gap to play for a swing trade to make even more money. The first day of stock gaps on its new move gives you the best entry for the stock if you know how to read the chart. And that's what I teach in my class. You can make a lot of money with less risk and more reward if you know how to play this. And this is the advantage of learning how to do this. This is the advantage of taking my class. If you decide to do that, it can be advantageous to you, okay? Because you're going to learn this very specifically. All right, let's look at some charts. GMCR. This stock back in September, see right up here, of 2011 was about $115 a share. Huge, nice move up. What happened? Gap down right here. First day gapped. This would have been a beautiful entry for a core swing short in this trade if you know how to find these and pick them and play them. You could have played it intraday, and then you could have gotten in this for a core swing trade, for a short move or a long move. You could have played it down to here, or you could have played it all the way down here, taking profits and adding to your position the whole way down. You need to know how to find this gap when it happens to play it, but if you do, look at what happens. Look at this. Beautiful. $115 this was in September, not even a year ago, almost a year, not quite. And it's down at $24.43 as of August 10th, 2012. This stock has lost 75% of its value, price, in less than a year. And if you know how to find gaps like this, if you take my class, if you learn how to do this, look at the power of this move. Look at this. Okay? There's many people that are reading the fundamentals of this stock that say this is a great company, it's a good buy, and those people were buying this every time it dipped down here. Those people were getting crushed, okay? Because they thought the fundamentals of this stock were so strong. Maybe they are, okay? Maybe they aren't, maybe they are. The bottom line is technical analysis and price action is what really tells you what's happening with this stock, okay? So you need to know how to read these gaps. This is power here, knowing how to do this. Not a lot of people really know how to trade gaps correctly. And if you can learn how to do it, you are going to make a killing, okay? It's okay to combine fundamentals with technical analysis, but you can't ignore the charts of these things, okay? Buying things, trying to pick bottoms and dips is very dangerous. Dangerous to your account. Don't do it, okay? Trade using a strategy. Picking bottoms is not a strategy, okay? Buying a stock that's fundamentally strong in the middle of nowhere every time it pulls in isn't a strategy, okay? That is not a strategy. You can create a strategy with that using charts and fundamentals. But if you do that and ignore gaps and don't know how to read gaps, you're still going to get crushed, okay? This stuff is powerful if you know how to use it and read these things. In fact, there's just nothing better, in my opinion. Let's look at another one. power of gaps, deck. This is a great example, okay? This is a great example of why you really need to understand technical analysis and read charts if you're going to trade your own money, whether it's core trading or day trading. It's very important to know how to read charts, okay? So what happened here? The stock had a bullish gap up right here in October of 2011, gapped up to all-time highs. Huge, nice, green, solid bar. Everybody's happy. All-time highs. This is a gap. This is a bullish gap, okay? What happened? Next day it's topping tail. Some people thought out of it. No big deal. Nothing to worry about. Everything's fine. It's holding here. Boom. Gap down. Right after it tried to break out to all-time highs. Right after it did break out to all-time highs. Right after this, it gapped down here. This completely failed. Completely failed. Okay? This was it. It's over for the stock right here with this one gap down. And if you know how to find these, this is what I teach. Look at the move you could have gotten on this. This is another example of one that has lost 75% of its value, 60% of its value in less than a year. Less than a year. You only need one of these a year. You can find one of these a year. You're going to crush it, okay? Have to know what you're doing. Have to know how to find them. Have to know how to play them. I can teach you that. But if you can get this right and really buckle down and learn it, work hard to read these things and figure it out, take my class, do the work, it's going to pay off. It is going to pay off, okay? So this gap down here, count on how many times did this gap down? 1, 2. That's a gap down right there. I just saw that one. 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 times. The stock has gapped down 11 times in less than 12 months. It's gapped down 11 times in 11 months. I mean, you could have added to this position every time they gap down. You would have had to lower your stop, and I would have taken some profits in here at different places. But the bottom line is, this was a huge opportunity to make money, and it all started up here. Best price, best entry, best everything. No suffering. Never suffered. Didn't suffer at all in this. If you got this entry, if you found this, if you took my class and know how to find these things, you never suffered in this position. Okay? And that's the whole reason that I created this 26-point rating system, okay? To alleviate suffering. Okay? We want to get in something and we want to be right. I know there's no such thing as 100% anything in trading or the market, but this system that I figured out is as close to 100% as you're going to get, okay? It's close to 100% as you're going to get, okay? I have total conviction in my rating system for that. Total conviction. I call it 100% conviction because it's as close to 100% conviction as you're ever going to get in anything that exists in trading. Look at another one. This is beautiful. Beautiful chart. $300 some this Netflix was up at. Okay? This was back last 2011 as well. This was in July. And what happened to this? Similar chart here is DEC. Look, this bullish gap had a bullish gap here, ran up, had a nice little run up into $300. People took profits, no big deal. And what happened? Gap down right here. Gap down right here. Now, if you play this intraday in the day of the gap, it failed as a short, but it doesn't negate the fact that it's a bearish gap. And if you know how to read gaps, you'll know that this is a bearish gap, okay? Now, that being said, not every single gap under support works, okay? That's why I have the 26 points I look at. You have to know everything that you're trying to look for in these to see if this is a real move, if this is really going to continue, okay? And it does. Again, no suffering. First entry was there, no suffering. Now, if you know how to read gaps, you could have got in this tier. Or you could have been like everybody else, but finally decided to get in this tier. And then that's what created this huge drive down. Everybody jumped on the bandwagon here. Either sold out of all their long positions or decided to take this course short right in this day. Okay? So this is what pushed us down really hard here. But if you know how to read gaps, you could have been in all the way up here, around 250, 260 bucks. I mean, this price was around 180 something when it opened this day. Okay? You would have gotten $100 better price up here. You would have already up so much money. By the time this thing got down here, you probably maybe would have taken some profit or added to the position. Okay, who knows what you would have done? Everybody has their different goals or how long they're holding these things. But the bottom line is, if you get in up here, you're not going to suffer. You are just not going to suffer. And if you can hold it, when this thing happens, you can add to your position here. And look at that. Just look at that. Beautiful. Does everybody see how this is, knowing how to do this is hard. And this is what I teach how to do. You really got to know what you're doing to be getting in here. This is easy. Everybody's getting in here. Okay? This is the people that really know how to do this. They know how to do this one thing, and they really know how to do it well. This is everybody else in the world. Okay? You want to be in here. You want to be smarter, faster, get the best price. You don't want to suffer. Okay? You want to make as much money as you can with the least amount of risk, and that's up here. Okay? Because for all you know, this thing could have rallied a little bit here, and you might have suffered. You might have gotten in here and had to suffer through a rally into resistance. It didn't happen that way. Okay? But that's what can happen sometimes when you get in these late. Doesn't mean they're not going to continue. They will. They do. But you may have had to suffer if you got in at this late. There's no suffering up here. Okay? Beautiful move down. Okay? Look at this. $59.90 as of August 10th. This entry up here was $250, $270 bucks. In a year. A year's time. 1 year. July of 2011, it's August. All you need, like I said, is one of these a year. One of these a year. One strategy that you know how to do very well. And this is my favorite chart of all. I made it really small so you can see the whole thing. It goes all the way back to 2008. You can see this price up here is around $145. Was the high of this stock at one point back in 2008. Okay, May, June it was. This stock has gapped down so many times you can barely even count them all. As of August 10th, the price was $8.29. Look at this. It's just beautiful. Okay? So many opportunities in here to play this and make money. So many. And we're gonna go over an example right now, just so you can think about it and feel it and really get a sense of the money you can make in these things, okay? This is the chart just for the year of 2011. Okay, went back just from this one gap. This happened in late March, it was March. This was in March of this 2011 year. I'm going to go over an example if you had played this. Okay. Actually, no, this is March of 2012. No, this is March of 2011. This is March of 2011. All right, let's go over it. March 25th, 2011. The price on that opening of that gap was $57.17. Your stop would have been over 62.10, which was resistance. Okay, I would have given it a cushion of about a $6 stop from that price of the entry of 57.17, and I'll show you the resistance I'm talking about, okay? If you had taken 500 shares of this short, you would have risked $3,000, and if you got out of it on August 8th at $7.67 in 2012, okay, so it's about 17 months of an investment, you would have made $24,750 in 17 months. Your risk was $3,000, and this is how much you made. This is over 8 times the amount of money you risked you made in 17 months. That's phenomenal. Phenomenal for any investment, anywhere, doing anything. That is phenomenal. In a little over a year, okay, you took your money and you made over 8.5 times the amount that you invested in it. Let's just look at this here. This was the entry. Okay, this was the March entry in 2011. Because this is not the first time this gap, okay, this move already was happening since 2008. So I'm showing you a late entry just to give you an example that even if you get in late fees, you can still make money. However, you have to put your stop at a higher place because sometimes they rally into resistance. In this case, the stop would have been up here. It would have been, you don't want it to really go over that green top of that green bar back here. Okay, so it's really around this area. The whole number, I'd say 63 is what you really need to put it at. Okay, so you can enter this here. The stop is this resistance area. The only reason being because you're playing this late. Okay, this is not the first day this stock got down. Remember, it was 2008. You missed more than half the move. You can still make a lot of money, but the point is you have to give it more room to wiggle and jiggle. Okay, when these are already on the move. Still not a problem. It's still a great reward to risk. If you learn how to trade gaps and take my class, I can show you how to get that first entry back in 2008 and you never suffered. Okay? But you can still make money doing this if you know how to do this later after they're on the move. Okay? I just want to show you where I put to exit out of this and why. And you didn't have to get out of it at that price I put on there. It's just that you've had a really nice move, you got in it late, at some point you want to take your profit, and I put to get over this, when it went over this pivot here, this is a pivot on the daily chart, and that's where I said to get out of that at $7 and some cents on the day it did this, okay, which was the 8th. You don't have to, okay? I'm just saying that would have been a place that you could have put your stop, because you're up all this money already, okay? Here's the same example. If you've taken 1,000 shares, 1,000 shares of this, risking $6,000, okay, in 17 months would have made you $49,500. $49,500, 8.5 times the amount of your investment you would have made in 17 months. Playing the stock, okay? Great, great move. And this is the best example. I mean, if you have money to invest and you know how to do this, you could have taken 2,000 shares and risked 12 grand, and you would have made almost $100,000 in 17 months. $100,000 in 17 months on a $12,000 investment. That's phenomenal. That's incredible. That's better than you're going to get in a money market, better than you're going to get in a CD, better than you're going to get in bonds, better than you're going to get in a lot of things right now in this economy, okay? There is so much money to be made playing gaps if you know how to play them. They are very hard to do. Lots and lots and lots of people teach gaps. And let me tell you something. They teach you a little bit, and then you go and start to trade them, and you realize, like I did, that the system that you learned is not complete, okay? And the system that I have is complete. And that's why it's very detailed, and there's 26 points, okay? Trading gaps is not about looking at 3 things on a chart and playing it. Because sometimes they're going to work, sometimes they're not going to work, sometimes you're going to lose money, sometimes you're going to make money. At the end, maybe you break even, maybe you make a little, maybe you lose a lot, okay? Gaps are dangerous if you play them in the wrong direction. And they are rewarding you play them in the right direction. Okay, that's the caveat. You have to know what you're doing. It's possible to learn it. There's not a lot of detailed systems out there. It's taken me 3 years of my life to learn how to do this correctly with this much detail. And that's why I have 100% conviction in what I do. So you could have made $99,000 in 17 months. Plus, you could have played each gap intraday every time it gapped during that 17 months while you were swing short. And remember, we got that play late. That example that I gave you was March of 2011. And the first move happened in 2008. Okay? I didn't even do that example because it probably would blow your mind. Maybe I'll do that example the next time I do a video. Because it would be astounding probably. Okay? You only need to do swing trades like this once or twice a year to develop a savings for retirement or a better lifestyle for yourself. Okay? If you take my class, you will learn from me how to do this accurately and with precision. You will learn how to find these gaps. If you take my class and learn how to find and to play these gaps, you can make money day trading and also swing trading. And you can use this strategy for your long-term savings and retirement. You will not find a better risk to reward ratio in any other strategy or play than what I can teach you with this gap strategy. I am more convinced than ever, the more that I trade this, that the risk to reward with this specific strategy and play is astounding. It is just, there's nothing better than it, okay? Why? Because they're powerful. Because they're powerful. Because it starts a move in a different trend for the stock. And the days they gap, they move big. So you can play them intraday big, and you can play them long-term big. They're just powerful, powerful moves, okay? Remember, gaps are very powerful. Learning how to rate and read and pick the best gap each morning will help you pick the best stock to make you money. Gaps are very powerful. Learn how to play gaps and make money and play something I know called the swoosh, which is a concept that I've invented in my 2-day class. There's a lot of detail in my class, and I would love to teach you how to do it. And if you're interested, please email me or call me. I'm doing a class on August 25th and August 26th from 9 a.m. to 5 p.m. for 2 full days. The cost is $1,500, and you can contact me at melissa@thestockswoosh.com, area code 602-799-5754. I would love to have you. I'd love to teach this. I love talking about it. I love it all around. I absolutely love gaps. I love the golden gap, and I just can't get enough of it. So open your mind to the golden gap. That's what I'd like you to do, and I'd like you to contact me about taking my class. I hope you've learned something today, and we'll talk again soon.